Hi, Barry Koven here. Great to be with you. I wanted to share with you my 7 steps to a successful loan process. I've been doing this for over 20 years, so I've seen it all. I know the pitfalls, and I'm going to share with you some really great information to make this a smooth, streamlined process for you. First thing we want to talk about is what's going to happen to you during the process, okay? So we're going to receive, if you've already been pre-approved, then you already did the application. But regardless, we're going to have the application and the fully executed contract of sale, and we're going to send that in to my processing team. Now, then you're going to receive the disclosures and the signature documents. They'll be generated and sent to you electronically. Everything is digital, and you have to e-sign them ASAP. We can't proceed until you e-sign the documents. So they have to legally be signed within 3 days, but sooner you sign them, the better, because then we can get the loan into process. Now you're going to meet my team, okay? So I'm here for you the whole process for any issues or rate locking or going through numbers, bigger picture things. I'm like the surgeon, okay? But I have a whole team you're going to be working with, loan officer, assistant, and the processor, and many of my colleagues who will be getting you to the closing table. So you'll meet all of them at this time. Your application and all of those initial required documentation will then be submitted to our processing and underwriting team for approval. Now, at that time, you're also going to get in your email prompted to pay for the appraisal. Now, the appraisal is something we want to get done quickly and efficiently. So I would encourage you to pay for it right away. We can't order it until that is done. So take care of that, paying for the appraisal. Okay, now then, while your file is going to go into underwriting, then the underwriter is the one who approves the file, and they give you what's called the commitment letter. This is your loan approval, and you want to share that with your realtor and your attorney. Okay, now this is really important. On that commitment letter, we hand in initially your income and asset documents for you to be qualified. But then there are all documents that are still needed prior to closing by the underwriter. So you're going to work with your processor and get all of whatever documents are on the commitment letter. Your processor will review it with you and go over what's needed, and you will submit those documents back to them. Now, this may go on several times between that initial commitment and the closing. You will be asked to submit documents the entire process. So it's really important that you understand this is normal and a part of the process. So don't get frustrated by it. This is what everybody goes through who's getting a mortgage, and it's custom and ordinary, and you're going to need to engage with your processor. And remember, they may be working on many files, maybe 30 or 40. So it's your loan, so follow up with them. Have weekly calls, emails, meetings, and make sure you know what's outstanding and get it back to them, and keep the communication going, okay? Communication is going to be the key to our success here. Now, you're also going to need, during the process, you're going to have to get homeowner insurance, okay? When you have a mortgage and you own a home, there has to be insurance. So you're going to reach out to an insurance broker of your choice, and you'll get quotes and select your insurance company and get the insurance handed into your processor. The first year premium, the first year payment of the homeowner insurance, you will pay for prior to or at closing. Again, you could discuss those options with your processor. Now, one thing you want to know is that in almost all mortgages, in most cases, almost all mortgages, the taxes and insurance are going to be escrowed. It's called escrowed. So you're going to, again, you'll pay that first year homeowners insurance, but then we're also going to set up a closing, at the closing, an escrow account for you, where we're going to take a few months of taxes and insurance to get that account rolling. And then every month included in your mortgage statement is going to be 1/12 of the tax an insurance payment included in your monthly mortgage so that next year when the bill comes, the escrow account is replenished and has enough money to pay the year in full. So that's how escrows work. Now, if you're in buying a co-op or a condominium, there are some other things you have to know. A building approval is required. Now, the building may have a fee to fill out their questionnaire, it's called, which is a whole list of things the bank needs to know about the building. Don't be surprised by that, and you may be prompted to do that. If you're buying a co-op, you're also going to be getting what's called recognition agreements, also known as Aztec agreements, and those are going to be sent to you, and you're going to need that for your co-op board package. So look out for them. They're usually going to come in either the mail or FedEx. You need to save them, hold them, because your board meeting might not be till 30 or 45 days later. Don't lose them. They're very important documents. For condominiums, the building does also have to be approved, and if sometimes there's what's called a tax abatement. If that's the case, we need to make sure your tax abatement is 100% in effect. Otherwise, we have to qualify you on the full tax payment. I've seen this become an issue for people. Again, these are all things that only an experienced professional would be able to know in advance so that you don't have problems later on in your loan process. So be aware of that. Let me know if there's a tax abatement, and we may have to confirm a few things on that. Now, the credit report. If we've handed in your loan, we've already done a credit report. But there's a couple of things you have to know. On the credit report, they get checked again right before closing to make sure that you don't have new debt and you didn't buy a new car or open any other new lines of credit. If you have, we have to add that in to your monthly liabilities, and this could be a very major issue if my underwriters find out about that a couple of days before the closing. So you do not want to change your credit profile during the process. Don't open any new accounts. Don't close any accounts either. That could negatively impact your credit score. Just leave everything status quo and do that. Also, credit reports are good for 120 days. So if you were pre-approved 4 months ago and now you found a property, be aware a new credit report will be required. So be careful, and again, don't change anything in your credit profile or speak to me about it first so we can make a plan, okay? Vacations. So there's going to be documentation and items needed all the way until the closing day. The process doesn't stop in the middle. Everything's going to be needed. So I'm not saying you can't go on a vacation, but I would be aware of that you really need to be involved and engaged, be available to hand in documentation throughout the whole process. Another key thing I've seen that people were not prepared for were assets due at closing. So you may be, look, this is the largest purchase of your life. You may be using all of your savings for your down payment. Be aware of what your closing costs are also. And remember, there are things that cannot be predicted. We can only provide estimated numbers. The title company and/or the attorneys are going to get the information sometimes the morning of the closing. I've seen it happen where somebody had to pay a whole year of property taxes, and the taxes were $12,000. That was $12,000 they needed on the closing day that nobody could have predicted before. So be prepared, have the conversations with your attorneys, realtors, title companies, and/or me about what the closing costs are, and you should have a little buffer to be ready. Also, another thing, don't get frustrated, but at the end, sometimes those final numbers don't come out until the morning of the closing. That's not uncommon. So be prepared for that. Knowledge is power. If you know this If no one told you this, that could be a very frustrating experience. But it doesn't have to be, because you could be prepared and you could know, oh wow, the lawyer, the title company, the closer at the bank, it isn't getting all those final numbers out until the morning. I might have to run to the bank and get certified checks literally a half hour before the closing and then drive to the closing. So be prepared for all that. You're also going to get a document. It's called the closing disclosure. It has to be signed 3 days before the closing by law, so that you're aware of a lot of these numbers. So be around, look out for that document, and we're going to make sure you get that 3 days before the closing, and you have to e-sign it. Moving right along, reserves. We talked about the assets and being prepared, and some of the money you might need at closing might come up with the property taxes or something like that. You also want to ask and find out, besides the amount needed to close, some of the mortgage products and programs require reserves. Now, this isn't money, you don't have to spend this money. Reserves mean it could be it could be 2, 3, 6, 12 months of mortgage payments that the lender, the underwriters want to see you have just as a backup, as an emergency fund. So this could even be a retirement account. So again, it's not money you have to spend, but you might be required to show reserves. So be aware of that, ask about it, make sure you're on top of that. Now, home inspections, when you're doing a mortgage with me, home inspections are not required. You may choose to do a home inspection just for yourself. You want to see what's wrong with the house. Are there any issues? And that's great. Nothing wrong with that. But please don't forward that home inspection to anybody on my team. If an underwriter sees it, once they see something, they can't unsee it. And if there are some issues on the home, you don't want to necessarily bring that up and cause unnecessary issues or open up any cans of worms. So we don't need to see any home inspections. Now, also keep in mind that if you're changing a job or changing anything that might affect your income or your assets, you need to communicate that, okay? Job changes could be a major thing. We do a verification of employment right within a week of the closing. If you're suddenly not at that job, we may not be able to proceed. So you need to communicate all these things regarding job changes or any other change to your income or assets that might occur during the process. Now we're going to talk about mortgage insurance. Mortgage insurance, also sometimes referred to as PMI, which stands for private mortgage insurance, an insurance that's added to your monthly mortgage payments. If you're putting less than 20% down, it's a requirement. So be aware of that, because I don't want you to have any surprises and be like, oh, what's this extra $50 or $100 or $200 in my monthly mortgage payment? It's because if you're putting less than 20% down, it's required. Also, if you're doing one of the government loans, like the FHA loan, for example, they have upfront, not just monthly mortgage insurance, but a one-time upfront payment of mortgage insurance. So you need to be aware of that as well. And another thing is, anything regarding your income or assets could affect you getting approved or not. And we don't want surprises when we're 30 or 45 days into the loan, right? So if you have anything that affects your income or liabilities, let me know about it, okay? I'm talking about things that we may not have been able to see, like maybe you have a payment plan set up with the IRS for taxes, or child support payments, or a personal loan that's not on your credit report. Maybe you're entitled to another property. You're an owner of another property, or you have an equity line of credit. We need to know all of these things so we're not caught off guard and have surprises and can negatively impact your approval during the process. So let me know all of those things, and then we'll keep everything moving for you smoothly and efficiently. Thank you so much. Always reach out, call with any questions anytime, and we're going to make everything happen for you. Okay? You can always reach me and my team and throughout the process, and we're going to communicate and get you to the finishing line efficiently. So this is all great information you need to know about, and thank you, and I'm looking forward to helping you with your mortgage process.